Hello and welcome to Finextra. I'm Thea George and I'm here with Warren Gardiner of FIS. We're at EBA Day 2016 in Milan and we're talking about instant payments. Warren, thank you for joining me.
Pleasure.
So, flavors of fast. What is it and why do you do it?
Good question. We actually started doing a body of research for our own business purposes in around 2013. And we accumulated quite a substantial body of work from a global perspective. And what we decided to do is actually turn that into more of a market generic document and make it available to the wider market in general. But when we decided to turn it into a market document, what we didn't want to do is just go to market with another report on what countries were doing. We wanted to bring more of a bank side discussion or perspective into the document. So what we decided to do is to look at these schemes from an innovation perspective. Were the real-time schemes genuinely acting as a catalyst for innovation on the bank in terms of interfacing to their customers, building new business propositions, new transaction services to their customers? Because at the end of the day, if you're just putting new rails in place, they're just faster rails. It has to have material impact on the customers. So we invented what we call our Faster Payments Index. And what's core to the report is that we rate every single scheme according to their ability to be a catalyst for innovation. And that's the real, I think, intrinsic value of the report is the Faster Payments Index, where we rate every scheme based on a set of characteristics which we think will foster innovation. Are they delivering open APIs? Are they actually built on a message formats and schemes which allow additional information to be carried? Those sorts of elements which we think are more important than just the speed. It's about how you are able to foster innovation. So that's why we think is quite unique about the report and why we did it.
Okay, that's helpful. So what's new in terms of facts for the 2016 edition?
Well, this is our third edition, and it's quite interesting to see the contrast from the first edition to the third edition. In the first edition, for example, we identified and reported on 16 real-time schemes that met our characteristics of what a real-time scheme should be. Of those, around 12 were live and the rest were either in planning, in discussion, those sorts of things. 3 years later in 2013, and the difference is quite remarkable. We now have 28 schemes versus the 16 schemes. So that's effectively a 70% increase in the number of schemes that are either live or in planning in the world today compared to only 3 years ago. And we're forecasting that another 10 schemes will actually be added to that within the next 2 to 3 years. So that's a significant change in terms of the number of schemes. The other difference is significant in this report is the level of uptake. 2 countries in particular provide a very good example of that. In India, there's been something like, since the first report, a 4 times increase in the number of volume of transactions going through their new real-time network. In China, the differences are even more dramatic. In China, there's been a 30 times increase in the volume of transactions and a 90 times increase in the value of those transactions in terms of total value passed through the real-time network. So that shows that if executed properly to the right markets, that these systems can actually work. And maybe the third area is in the notion of innovation and around APIs. Previously, there wasn't a very strong appetite for API enabling real-time systems. It was more about the rails and the speed and the interbank. Now it's more about the customer side. How are we going to enable that? The APIs that we're going to deliver to the market, which in Europe, coupled with PSD2 and the open access to account legislation, does create a bit of a perfect storm in terms of the front end interaction with customers through API banking, right through to the clearing network and the real-time processing at the back end.
It's interesting stuff. So you've mentioned a few things, APIs, PSD2, immediate payments, obviously. Clearly banks have a huge amount on their plate in terms of change. What are some strategies for coping with that, do you think?
So what we're seeking to do, most banks I think are still addressing those two subjects as separate topics. APIs and real time. And both of those areas are going to require substantial investment by the banks to actually execute and comply. And what we're encouraging banks to do is don't look at those as separate initiatives, look at them as a single initiative under a single budget with a single strategy team actually addressing that. So what we're trying to encourage banks to do is to look at that PSD2 and access to account and public APIs, not as a separate topic to real time, but as a single topic. Because they have to spend money on real time, they have to find budget for access to account. And rather than treat them as separate technical initiatives and separate business initiatives, treat them as one. Because what we are saying to the banks, we don't want them to encounter, as we try and humorously say, the Homer Simpson moment, where they end up having separate budgets, separate initiatives, they implement APIs, and then suddenly find they've not thought about the whole end-to-end throughput experience from channels right through to the clearing and settlement streams. So in that moment, by thinking about them in a more holistic way, they'll hopefully avoid that Homer Simpson moment where they realise the mistake that they've made.
Warren, this has been great. Thanks again. And thank you for watching.